Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Buying time. Japan's Prime Minister Shigeru Ishiba now promising to focus on securing a trade deal with the U.S. following a historic election defeat for his Liberal Democratic Party. In a shift from traditional trade issues, Treasury Secretary Scott Bessent says the next round of U.S.-China talks could include a discussion of China's purchases of Russian and Iranian oil. And the White House says President Trump was, quote, caught off guard by Israel's bombing of Syria's military headquarters in Damascus last week. It has just gone 8 a.m. across the Emirates. I'm Joanna Bersace in Dubai. Guess what? Another record high for the S&P yesterday. Once again, we continue to make record after record. Today, futures not doing a whole lot. You can see S&P and NASDAQ futures basically trading sideways, but still all-time highs. And you think about how far we've traveled since the depths that we reached in April. It really is quite a stellar recovery, both on people's expectations for the earnings season. So far, we've seen a whole bunch of positive surprises. So this week, there's going to be a lot of attention on those tech names that are going to be printing or giving out their earnings results, rather. But then also the macro backdrop hasn't transpired to be as bad as we thought it was going to be a couple of weeks ago. So there's positive surprises giving a tailwind to some of these U.S. equity markets. Dollar yen clearly in focus still as we talk about the knock-on effects from this weekend's upper house elections. You can see today the yen is losing a little bit of ground versus the USD, but marginally so, only about 0.1%. The bigger picture the last couple of days is it seems to be a case of buy the rumor, sell the fact, because the yen actually did rally back after the LDP defeat. We also saw similar in the Nikkei, which is reopened for trade. So we'll talk about that in a moment with Avril. And then 10-year yields, also interesting to note as well that we've actually started to move down again. So we've rallied about 5 basis points in the last 24 hours. Remember, we were close to 4.5%. 4.37 is where we're at. And people are talking about maybe unwind of positioning or the fact that those steepener trades that we've spoken about got quite crowded. And so in the past couple of days, as we head into the summer season, thinner liquidity, people are taking some chips off the table. But it's also 6 months into Trump's term. So I thought this would be interesting to look at. Let's take a look at some of the key metrics that, President Trump himself likes to look at. S&P 500 net 6 months into his term. So this is going back to January 20, not since the beginning of the year. S&P is up 4.7%. Bitcoin, obviously crypto with the new Genius Act, all of that has been helping, up 6.2%. So the crypto community still actually managed to achieve the boost that they were looking for out of this Trump administration. The dollar index, the weak one, down 7.6%. President Trump, Scott Bessent have talked about wanting a weaker dollar, maybe not this week, but still, there you have it, weaker by 7.6%. And then crude, so WTI down 11% as we talk about uncertainty vis-a-vis demand in the next half of the year, in addition to the building supply inventory dynamics. So that's been weighing on the complex as OPEC continue to bring back barrels to the market. And then 10-year yields, this is interesting too. Despite the fact that they've announced this mega bill, the BBB, 10-year yields in the U.S. are actually 20 basis points lower since Trump stepped into office. So we spent a lot of time talking about the fiscal trajectory. Net, though, since January the 20th, 10-year yields are actually lower. So interesting to park there. Okay, let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. And Avril, maybe just unpack for us a little bit more what we're seeing in some of these Japanese markets today.
Yeah, I mean, we're seeing Japanese stocks back from the post-election weekend of sorts. So we're seeing a reversal from the early gains of about 1% on the Nikkei. But broadly, if you look at Asia, it's also interesting how the recovery in stocks has also taken a bit of a breather. Investors are watching out for corporate resilience in a big week for U.S. earnings and, the signs of how they're dealing with all these tariff risks. So a bit lackluster in terms of direction aside from in Japan. But China is also interesting because we're seeing that continued rebound in mainland stocks. And this is also helped along by what we're seeing in infrastructure-related companies. As we heard over the weekend, the launch of a mega dam in China, the building of that in Tibet. So the infrastructure plays are extending the gains from just a day ago. Aside from election weekend out of Japan, we also have somehow these continued continued political uncertainties and tariff risks. So equity strategists think that could cap the gains we're seeing in Japan. The yen also not quite being able to hang on to the gains of just a day ago.
Avril Hong in Singapore, thank you so much. Well, as Avril was just walking us through, we're seeing, well, not a lot of movement in Japanese assets after markets reopened today following the ruling LDP's election setback. Prime Minister Shigeru Ishiba has apologized to the party for losing its upper house majority, saying he will now put all his efforts into negotiating a trade deal with the U.S.
We must protect Japan's interest in trade talks with the U.S., keeping in mind the deadline of August 1st. I have passed this message to U.S. Secretary Bessent when he recently visited. Akazawa will be visiting the U.S. from today, and I hope to show tangible results in trade talks soon.
Let's go to Tokyo and our Japan politics and economics reporter Sakura Murakami. It seems as though the Prime Minister is taking a leaf out of President Trump's book because he's deflecting, diverting attention. He's now saying, well, look, we can look past the upper house elections over the weekend and look forward to those trade deal discussions with the U.S. How, and in effect, in reality, how are these trade talks actually going, and how much clout does the Japanese Prime Minister have after these elections?
Well, in terms of clout, he doesn't have a huge amount. But that being said, Japan's top negotiator, Ryosei Akazawa, is in D.C. right now. There was this report, the presidential office, the Prime Minister's office just announced that he did meet with Trade Secretary Lutnick. He is there for these talks, but whether there will be a breakthrough or not, that's like a separate matter. Akazawa and also Ishiba himself has said these negotiations will go on until August 1. They have this deadline of August 1 in mind. But on the other hand, for the U.S. side, they don't have a lot at stake for these negotiations. Treasury Secretary Bessent himself said there's no rush. So there's a bit of a difference in the messaging there, and obviously Japan wants a deal, but we'll see if that actually can be achieved.
Yeah, what about the domestic economy looking ahead? Yesterday, when Ishiba was making that speech, he said that he's willing to work with other parties. I guess one of the big questions is whether he's going to have to offer some of those concessions on tax cuts. What is the expectation?
Yeah, so with the elections, a big topic was the inflation, and most of the opposition parties ran on a pledge that they will cut the sales tax to varying degrees depending on the opposition party, but that was sort of a common theme, and that the people voted in favor of that. And today, Finance Minister Kato reiterated that the LDP, the government, is not looking to cut the sales tax, and that fiscal health is still very important. But if Ishiba kind of loses his grip on power even more, and if he has to make concessions, if he has to negotiate with the opposition parties, then the sales tax cut is going to be coming up. It's going to be a big topic, and it might be a concession that he has to make.
Bloomberg, Sakura Murakami, thank you so much for breaking it down for us, both on markets and on policy. More on markets now with Dan Scott, Chief Investment Officer at Vontobel. Dan, so much to talk to you about. Maybe let's just start with Japan. Do you have any skin in the game? How closely were you watching the election results over the weekend, and the potential ramifications it could have for broader global assets as well, as we keep an eye on dollar-yen?
Oh, definitely. I think there's an opportunity in Japan and Japanese equity. I think more broadly speaking, developed market equities, when you look at the year-to-date gains that we've seen, might be tempting to try and take some profits if you've been in it and retrench a little bit ahead of the 1st of August. But we'd actually say that a lot of the uncertainty that we have, also looking ahead to tariff negotiations here on the 1st of August, is that we probably have this peak uncertainty around tariffs behind us. It seems somewhat clear to us now that while there's going to be continued noise over the summer, you're probably going to end up with an effective tariff rate in the US of around 20%. And so the question is, what kind of impact is that going to have on corporate earnings? And that's why this earnings season has been so interesting for us, and will be once we start getting more of the Japanese corporates starting to report. So far, what we've seen from earnings season is that companies have been able to maintain record high margins. And the consumer, especially in the US, has also remained resilient. So from that perspective, macro doesn't necessarily equal markets. And we think that, EPS has potential to continue to go higher. And we're actually in a situation where we think it makes sense to be equity risk on right now.
Yeah. Well, U.S. markets, once again, hitting those all-time record highs. Why do you think U.S. stock markets have become so immune to all of the tariff news and the letters that are being sent out to various trading counterparties around the world?
Yeah, I mean, that's the question, right? So it's who eats these tariffs at the moment? And it hasn't been at the cost of corporate margins. So as a shareholder, you're actually doing just fine. Tariffs are having a draw on U.S. GDP and potential GDP. I mean, we're now in a situation where we're looking at the Eurozone and the U.S. with about a similar level of GDP. And that really changes things from the, more recent period of U.S. exceptionalism. So there's definitely a negative effect here. But corporates, in terms of S&P 500 profits, seem to be doing just fine, especially if you look at the tech cohort, tech and software, you can see that those earnings have been resilient. So that's what's really driving the index levels. Plus, what you were showing before in the entry, of course, is very important. What Trump has achieved, that, you showed trade-weighted dollar and the dollar index, its performance.
Yeah.
So,
how,
the U.S. markets
closely
are up strong year to date, but in Swiss francs, they're pretty much nowhere. They're actually still in negative territory.
Yeah, that's a really good point. If you look at it FX adjusted. One other major development is the noise right now between the Trump administration and the Fed, be it with the Fed chair himself, with the renovations currently going on at the Fed headquarters. How closely are you following that to extract a narrative, a potential market narrative?
Well, there are a bunch of Fed governors that are up for, so the governing body is going to look somewhat different. I think it's clear that we're going to have a dovish chair appointed. And so markets are basically assuming that you're going to have more dovish policy. That, of course, puts, further downside pressure on the dollar and supports equities, because we'd have more financially easy conditions going forward. So right now, as far as we're concerned, we're just going with the Fed and their dot plot, and we assume that there's going to be a September cut, and we assume there's going to be 2 more cuts next year. So that's where we stand on rates. We don't necessarily see that there is much of an inflation problem. Yes, there has been a tiny bit of goods inflation, but otherwise you have a bunch of disinflationary forces underway. And if you're looking at inflation, headed towards that 2% target towards the mid of next year, then I think that there's, plenty of scope for the Fed to start cutting.
Dan, thank you so much. Always a pleasure to chat to you. Thanks for getting up early for us as well. Dan Scott, Chief Investment Officer at Vontobel. Now, Treasury Secretary Scott Bessent is calling for an exhaustive review of the Fed's non-monetary policy operations, including renovations to its headquarters in Washington. The Fed and Chair Jerome Powell have faced weeks of criticism from the Trump administration over the building renovations and for not cutting interest rates again. In a post on X, Bessent says that significant mission creep may be jeopardizing the independence of the central bank's core monetary policy mission. And still ahead, countries are racing to complete trade deals with the U.S. as Trump's reciprocal tariff deadline looms. Details next. This is Bloomberg. Treasury Secretary Scott Bessent says the next round of U.S.-China talks could include a discussion of China's purchases of Russian and Iranian oil. For more, let's bring in our news desk editor, Jill Deeses. Jill, well, over the last couple of days, we've been talking about Trump potentially, or the Trump administration, thinking about a one-on-one summit or meeting with President Xi, possibly around October, the APEC summit. We've also written some stories about how the U.S.'s stance towards China has become less confrontational in the last couple of weeks. Where do these discussions stand right now between U.S. and China? And if we rewind all the way back to, remember, the summit that they had in Geneva to establish that Geneva mechanism for a potential trade deal.
That's right, Jumana. So I think at this stage in the relationship, tensions definitely seem a bit lighter. Obviously, we still have that pause in place on some of those really high tariffs that the U.S. and China were putting on each other. When you're looking at these latest Bessent comments, I think really kind of the standout there is that, you know, you've got a relationship or you've at least got some negotiations that are shifting maybe from just pure trade and economics to some matters of national security. I'd still say this is pretty standard for the U.S.-China relationship, but I mean, these latest comments from him talking about, you know, the Chinese being large purchasers of sanctioned Iranian and sanctioned Russian oil. We have heard Trump recently bring up the idea of potentially targeting, you know, nations that with sort of secondary tariffs or, you know, secondary sanctions that do purchase oil from those countries. I mean, how much that weighs into the U.S.-China relationship, I think we'll have to see. But it does kind of bode well for the idea of a potential Trump-Xi meeting when you have Marco Rubio, the Secretary of State, talking quite recently about how, you know, he just met with the Foreign Minister of China, Wang Yi. Did seem like they were kind of paving the way. Again, yes, maybe for something in October, you know, at the end of the month around that APEC summit in Seoul. We'll have to see where that goes, but, you know, obviously anything can change, but at least for now, it does seem like relations are, you know, kind of at a decent point right now, at least enough to kind of pave the way for that leadership summit.
Yeah, and you really have to wonder whether that August 1st deadline is a moving deadline, because we've had a couple before that seem to have got pushed back. But EU also in focus. Yesterday, we were reporting that EU officials are getting together to think up a list of countermeasures in response to those U.S. tariffs. Where are we now in those discussions?
Yes, that's right, Jumana. I mean, look, I think with the August 1st deadline, we'll have to see what happens with that particular deadline. Obviously, yes, that kind of represents something of a pushback from a deadline in July that, you know, Trump had originally set for negotiating some of these deals. Of course, you know, I think as we all know, it's quite difficult to negotiate one tariff or one trade deal in 90 days, let alone, you know, trade deals for the entire world. So you can kind of see where some of these negotiations are coming into play. With the EU in particular, I think what's really been kind of a rude awakening there is that it did seem like, at least for some time, you know, there's this idea that perhaps the EU would be capable of reaching a deal with the U.S. that put them at a 10% baseline tariff with some important carve-outs for different industries. Now, though, I mean, we're talking about a relationship that's being negotiated in the aftermath of Trump sending a letter that implied 30% tariffs on EU goods. So, I mean, really, I think kind of ratcheting up the rhetoric there, and it does seem like the Trump administration has hardened a bit on their stance towards some of these deals ahead of that August 1st deadline. I think if you're the EU right now, you're now facing a reality where you're probably dealing with, you know, quite a bit of a higher baseline and then kind of vanishingly small opportunities for carve-outs, you know, for really important sectors for them. They've been talking about aviation, medical supplies. So, yes, if you're the EU, you're sitting there thinking, you know, what kind of retaliatory measures could be in place? They've already been kind of talking about some measures on U.S. goods, but I think that the door ultimately then opens to not just, you know, increased tariffs on certain U.S. goods, but also, you know, potentially other, you know, export controls and things of that nature. So, again, just a couple of weeks left before that August 1st deadline. We'll have to see whether there's anything that really comes out of those EU-U.S. negotiations.
Jill, thank you so much, as ever. News Desk Editor Jill Deeses. And coming up, economic revamp. Nigeria overhauls how it calculates its GDP. We get the details of why this matters next. This is Bloomberg. Nigeria's economy is 30% bigger than previously estimated after authorities changed the way they calculate GDP and added new sectors. The upward revision means some key fiscal metrics, including the ratio of debt as a percentage of GDP, may now look better. Our chief Africa correspondent, Jen Zabazaja, joins us now. Jen, just walk us through these changes and how it impacted how Nigeria's economy is actually assessed at a macro level.
Right, Jumana, this had been a long time coming for the Nigerian economy and also for Nigerian authorities. And as you mentioned, we did get this rebasing of GDP, but also this came in tandem with a rebasing and actually a reflection of the CPI inflation basket that we're actually taking a look at when we take a look at month-to-month inflation, the basket that authorities are watching. And so this is something that authorities were waiting to happen because it just gives a better reflection of where the economy is. If we take a look at some of the data prints and the numbers that authorities were working with prior to this, it was based on figures from 2010, which is, of course, quite a long time ago. So this rebasing now reflects figures from 2019, which authorities say was a more stable time for the economy and did not have any external shocks that were really affecting the economy. And so, yes, as you mentioned, we did get some numbers and some prints that reflected a bit more positive signs for the Nigerian economy. But moving forward, authorities are really going to be taking a closer look at what this means for the outlook for this economy. Some people had hoped that this would be a reflection. Potentially, we see Nigeria moving back up to being the top economy on the African continent. It still is not at this point. And there's some of the sectors, if we dig into the numbers, that are a reflection of that. But yes, this GDP rebasing is now official, and authorities are hoping that now the next step for Bola Tinubu, who is the president of Nigeria, there can be some reforms for the economy.
Yeah. And Jen, big central bank meeting coming up today, but no change is expected despite the fact that inflation's been dropping.
Yeah, inflation has been dropping year on year, but still month on month, we're getting authorities still quite cautious about potential inflationary price pressures that could come back. And that is, of course, if you take a look at food inflation in particular, we've seen weather-related concerns for authorities in Nigeria. And so, yes, Bloomberg Economics is not expecting the central bank they are expecting the central bank to hold today. And so the question will be, now that we have this new inflation basket for CPI, what does this mean for the outlook going forward, and what are the messages that we get from the authorities?
Jen, thank you so much. Jen Zabazaja, our chief Africa correspondent in Johannesburg. And coming back, we're going to talk about the latest developments in Syria. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Buying time. Japan's Prime Minister Shigeru Ishiba now promising to focus on securing a trade deal with the U.S. following a historic election defeat for his Liberal Democratic Party. In a shift from traditional trade issues, Treasury Secretary Scott Bessent says the next round of U.S.-China talks could include a discussion of China's purchases of Russian and Iranian oil. And the White House says President Trump was, quote, caught off guard by Israel's bombing of Syria's military headquarters in Damascus last week. Well, it's just gone 8:30 a.m. across the Emirates. I'm Jumana Versace in Dubai, gearing up for quite another busy week in terms of data, that we are getting into the summer lull in terms of liquidity, but still a lot of earnings to get through this week, including some of the big mega cap tech names. It's quite difficult to say that one, including the likes of Meta, Apple, Tesla, all of those reporting in the coming days. So will be key, obviously, for trajectory as we speak about both the Nasdaq and the S&P making all-time highs once again. So really, really strong performance out of these U.S. equity indices. Today, not doing a whole lot, leaning slightly towards negative, cautious tone prevailing. Dollar yen, a lot of focus, obviously, on the yen after the upper house elections this weekend, the defeat of the LDP minority now in both the upper house and the lower house. But the yen is losing a little bit of ground today, down about 0.1%. I should say in the run-up to the elections, it had lost more than 1.5%. So the theme is still of yen weakness versus the USD. And then 10-year yields, take a look. We have a full turnaround, I would say. We got close to 4.5%, now sitting at 4.36. You could say it's a bit of a position clean out or some trimming of positioning given how many people were underweight fixed income and also employed in those steepener trades, which have done well so far. So perhaps taking some chips off the table as we talk about stabilization in fixed income. As for what we've been tracking this morning, I thought it would be good to just signpost 6 months into Trump's term and how key assets have done, financial indicators. We have the S&P up 4.7% since January 20th, Bitcoin up 6.2%. So again, crypto, obviously no surprise, has been doing quite well. And then the dollar, which we spent a lot of time talking about, the potential de-dollarization trend that has happened since April Liberation Day, still down 7.6%. So the Trump administration says it does like a weaker dollar, maybe not this week. WTI, the energy complex, under a lot of pressure this year, less so to do with Trump, I would say, though he has said that he likes lower oil prices, and more to do with some of the decision-making out of OPEC and the fact that this supply side picture is building up at a time when the demand outlook for the global economy has started to turn south. And then 10-year yields, U.S. Treasury yields, we were just looking at them, are actually down 20 basis points over the course of the last 6 months. So despite all of the talk about fiscal premium and the fiscal trajectory, 10-year yields are actually lower. All right, let's move back to today, though, and check in on how markets in Asia are faring. Avril is in a Singapore studio. Avril.
Yeah, Jumana, we're seeing Asia stocks not giving us that much direction, actually extending some of those earlier declines. I think investors still on the lookout for what we get out of U.S. earnings this week, for signs of resilience amid tariffs or how these companies are dealing with it, at least. Amid all this, China and Japan markets stand out. In China, we're seeing them extending those gains, particularly among infrastructure stocks. Remember, over the weekend, we had the launch of a mega dam project in Tibet. But aside from that, there are also signs that stimulus is feeding through into the Chinese economy. Investors' fears about deflation also appear to be easing. Highlighting what we're seeing in Japan, we did start the day with gains of as much as 1%, following on from election weekend and stock markets there coming back to trade. But even though we've gotten the election out of the way, it's not to say that policy-making uncertainties surrounding government spending, potential tax cuts, and trade, that they've gone away. So that seems to be weighing on stocks in Japan, but also take a look at the yen and how it hasn't been able to hold on to the gains from just a day ago. Jumana.
Avril, yeah, worth noting, of course, Avril Hong in Singapore, keeping us up to speed on those Asian markets. Now, 28 countries, including the UK, Japan, Australia, Canada, and many European nations, have issued a joint statement saying Israel's war in Gaza must end now. The nation's foreign ministers say the suffering of Gaza civilians has reached new depths, condemning the recent killings of more than 800 Palestinians who were seeking aid. Israel's foreign ministry calls the criticism disconnected from reality. And the White House says President Trump was caught off guard by Israel's bombing last week of Syria's military headquarters in Damascus. This comes amid reports the U.S. president is increasingly concerned by Prime Minister Benjamin Netanyahu's aggressive military actions. Joining us now is Paul Wallace, Bloomberg's managing editor for MENA Economy and Government. Maybe let's just start with the sectarian violence that had kicked off in Suwaida in Syria, and the fact that you had these two warring groups. Israel then got involved, was bombing parts of Suwaida, also bombed the military headquarters in Damascus last week. The U.S. now saying that they were not aware that Israel were going to do it, even though U.S. had been actively trying to negotiate a ceasefire between Israel and the Syrian authorities. It's a complex situation, but what is the fact that the White House did not know about Israel's actions? Tell us about how involved they are and what's happening right now in Syria.
It is a very complex situation, both what happened in Suwaida and then what led to Israel's actions, and also what part America played in trying to ease tensions. Israel effectively says it did tell America, but it seems like America didn't know exactly what Israel was going to do, and that Israel moved pretty fast, especially with the bombing of the military headquarters in Damascus. And, we've seen the dramatic footage just aired moments ago. That took the U.S. aback, it seems. So they weren't aware of that. They weren't aware that that was going to happen. The bigger picture here is that Syria's new leaders are in many ways being embraced by Donald Trump. He has eased, effectively ended sanctions on Syria. He met the new president, Ahmed al-Shara, in Saudi Arabia in May, and they seem to get along well. Israel is still very wary of al-Shara and his and many of the people in his government. They often say that he's a wolf in sheep's clothing, alluding to his former past as an al-Qaeda commander, and they're still very nervous about him. That's creating some tensions between the U.S. and Israel over this. Going back into the bigger picture, this is a country, Syria, that's been devastated by almost 15 years of civil war. And to many people, it's not that surprising that Ahmed al-Shara, who's only been in power for about 6 months, is struggling to, get a full grip on the country and its institutions, including the military, because these institutions and the economy have been so devastated and wrecked and hollowed out since the civil war began in 2011.
Yeah, it's still a very precarious situation. Quite notable overnight that many of the EU foreign ministers and the UK foreign minister released a joint statement calling for the end to the war in Gaza. How significant is this?
It is significant. The countries like the UK and some of the others, like Australia, have voiced criticism of Israel for some time now about the humanitarian crisis in Gaza and the suffering of Palestinians there and the mounting death toll. But this takes it a bit further, and pressure is mounting on Israel, I'd say, bit by bit, week by week. It's almost got to the point as if the only country that really matters as far as Israel's government is concerned is the U.S. Israel is facing pretty strong criticism now from large parts of the world. It has few countries that are sort of backing its the continued war against Hamas in Gaza at the moment. So I think it was significant. The ceasefire talks with Hamas still seem pretty stalled. When among our reporters at Bloomberg, we're not getting a sense that we're on the cusp of a 60-day truce, which has been talked about for months now. It could still happen, and sort of both Hamas and Israel are blaming each other for those talks not making much progress. But yeah, as you said, that was a notable statement yesterday.
Just adds to the pressure. Paul, thank you so much. Paul Wallace, Bloomberg's managing editor for MENA Economy and Government. Now, France has ended its permanent military presence in Senegal, the last West African country where it maintained a permanent troop presence. For more, Bloomberg's Ondiro Ganga joins us now. So talk to us about what this means for Senegal. Is it the end of an era or the beginning of a new era, or possibly both?
Jumana, it's definitely the end of an era, not just in Senegal, but in the larger West African region where France has had a presence. And this relationship dates back to all the way in the 60s, post-independence. France developed really strong military ties with some of these countries. And we have seen French troops in that region grow to up to 20,000 soldiers. They've carried out over 90 operations, some direct, some indirect. However, with their growing presence, questions have begun being put to them. For example, in Senegal, the 1994 massacre, with the new president, Bassirou Diomaye Faye, coming into power and saying that there are questions about sovereignty with the presence of French troops in the country with a permanent base. In Niger, when there was a coup, France was demanding the reinstatement of the ousted president, which again raised questions about France's interference in local politics. There's also been growing anti-French sentiment, particularly amongst young people. And that's why we've been seeing this gradual shift. Niger, Mali, Burkina Faso technically kicked them out, 4,300 troops out. And then you had Chad, where they had to shut down their last footnote in the Sahel. Finally, Ivory Coast. And with Senegal now handing over the bases and taking them over from France, it means that this is technically the end of an era, with their last permanent base on the African continent in Djibouti, where they share it with other superpowers like Russia, the US, and China.
So a pretty pivotal moment then. What is the pathway, if at all, for France to rebuild relations in Africa now?
It's going to be tricky. First, President Emmanuel Macron must start with an apology tour. He has, in the recent past, said that Africa wouldn't be where it is without France, and the continent needs to be grateful to him. And of course, this came from frustrations because he was trying to find a way to negotiate and find a pathway for these troops to stay on the African continent, but it was not possible. So he might have to start with that to soften the grounds a little. Then he must open the pass, and he must open it big time. You have China and the Middle East that are leading in terms of sending financing to the continent to do projects. Then you have US that is charting a new part of the African continent in terms of mineral partnerships. You have Russia that has taken dominance when it comes to security, particularly in West Africa and the Western Sahel. So France might have to find a new pathway for cooperation on the African continent.
Bloomberg Sandira Ganga in Kigali, Rwanda. Thank you so much. Now, coming up, UAE lender RAK Bank reports a 26% jump in first-half pre-tax profit. We speak to the CEO, Raheel Ahmed, next. This is Bloomberg. Turning to domestic earnings, and UAE-based lender RAK Bank has reported pre-tax profit for the first half of the year at 1.5 billion dirhams. That is a 26% jump year-on-year, which the bank says has been driven by non-interest income growth and an improvement in asset quality. Joining us for more is Raheel Ahmed, CEO of RAK Bank. Good to have you with us on the set. First half profit up 26% versus last year. Just walk us through what the drivers were and where this growth is coming from.
Sure. Pleasure to be with you, Jomana. And I think, as you know, the interest rates, we saw 100% basis point rate cut last year. So the net interest income was driven largely flat, but based on balance sheet growth, we were able to minimize that impact. Bulk of the growth came from fee income and from acceleration in wealth and other types of fees, forex, hedging, corporate cash management, and so on and so forth.
How do you see the outlook then for net interest income over the rest of this year?
So as you know, it has been very volatile. When we did the budgeting for this year, we all thought there'll be 4 rate cuts. We haven't had one so far. We do expect a couple of rate cuts, at least from our forecast perspective. But I think the buoyancy in the UAE market remains very strong. The domestic economy grows very well. Number of residents continues to increase. So we are quite confident that the growth in balance sheet and the growth in momentum should be able to see us again delivering a strong earning in H2 as well.
Yeah, and on the fee generating income, where are the biggest growth areas right now for your bank?
Yeah, so I think forex, hedging, and wealth management, and actually a lot of millionaires, billionaires coming here. So real good growth on the wealth product side is driving that. And some of it is we have value-based and packages and for SME customers as well. So we have opened around 11,500 more SME customers this year. That's driving the growth as well.
Yeah, I was going to say, how would you say the outlook is for the SME customers that you serve? Because that seems to be a niche where the bank stands out. And I just wonder whether it can continue growing at this trajectory, or we're getting to the point now where things are going to start petering out.
So I think there's been quite a fundamental shift in the type of SME businesses. If you go back 5 years, most of the SMEs here were trading, so they were importing, exporting. 65% of the business we see with our SMEs now is domestic.
Interesting.
Right? So it's shifted significantly. So I think that de-risks it quite a bit. So even when you have the tariff issues or some of the the issues on logistics and all, you really don't see as much impact as you would have expected a few years ago.
Any credit concerns beginning to pop up?
Not really. It's just been completely benign, right?
Yeah.
So it's fantastic.
Why do you think that is the case?
I think that, again, goes back to the economy and the growth in the economy. I know wage inflation is happening. There is cost of living happening as well. But people are earning larger, the salaries have increased, but also the bonuses, incentives have increased.
Yeah.
So I think we see overall a very good economy, no concerns on credit right now.
And what are the signals that you are seeing from the retail spending side in terms of consumer spending, credit card spending?
Yeah.
How would you say those growth numbers compare to prior years?
So we have seen a 10% uptick. We had around 1.2 billion dirhams of card spend a month this year on our with our consumers. A lot of it is wealth, investments, well-being, fitness, and then naturally the utility and grocery payments. Travel is starting to peak out. It grew very rapidly last 3 or 4 years, but I think it's starting to flatten out now.
Yeah, interesting. Yeah. Interesting you pick up on those micro sectors. One thing that I saw from your earnings that I thought was quite interesting is your expenses have grown by about 12.9%, right. 13%, driven by investments in tech, in data, and in people. That's quite a hefty increase on the expenses side. Is it going to pay off? Are you going to get the return on investment?
I think so. So far, it's been a good story. We have quadrupled almost our earnings in the last 3.5 years. Some of it is naturally driven by the momentum in the economy, but a lot of it, if you think about our balance sheet, it's grown by 40 billion dirhams in the last 4 years, and we've been able to do that without growing headcount. So naturally, tech data plays a big role into that. And we think that, as we design for the future, those investments will definitely pay off.
Where does artificial intelligence fit into the picture?
So we have been doing a lot. We have boxed it into 4 different components. There is a hype cycle of any new technology, as you know. So if you peel that out, I think the biggest benefits we have seen today are in technology. So coding, testing is getting really automated. 30% of our code is being written by AI. We have done some things for colleagues, and we are now looking to experiment things with our customers as well using AI.
Yeah, interesting. Really good to have you on. Thank
Pleasure's
you so much.
mine. Thank you.
Raheel Ahmed, RAK Bank Group CEO on earnings day. And coming up, Turkey wants a new deal with Iraq on an inactive oil pipeline. We get the details next. This is Bloomberg. Turkey will seek a new deal with Iraq on an oil export pipeline that's been inactive for more than 2 years over a payment dispute. Bloomberg understands Ankara is unhappy with the underutilization of the pipeline under the current deal and is looking for a better arrangement. Turkey has sent its neighbor a draft for a new, more comprehensive energy cooperation agreement. For more on what this entails, we're joined by Bloomberg's Patrick Sykes in Istanbul. Patrick, idle pipeline, Turkey wants to get it up and running again. What do we understand they're asking out of Iraq?
Morning, Jumana. Yes, that's right. Turkey's mentioned 2 things. The first is that underutilization. So first and foremost, Turkey wants it back up and running. But secondly, when it does, it wants an expanded pipeline agreement. It wants this to cover not just the current crude oil flows, but also electricity and petrochemicals. The latter, I think, is interesting because the end point of the pipeline, Ceyhan, on Turkey's Mediterranean coast, is also a place where Turkish companies have been trying to invest in petrochemicals facilities recently with some, multi-billion-dollar investment tickets. So it feels like they're trying to press for the advantage a little bit in Ankara, take advantage of the current idle situation, which, as far as we know, is not helping anyone, be it Turkey, the Kurds, the independent producers there, and look for an agreement that benefits, I think, itself and also its private sector in the longer term from around this time next year onwards.
And what does it mean for the pipeline itself? Is there any prospect for flows resuming? Can it be reactivated anytime soon?
Yeah, so as you said, it's been idled for just over 2 years now. That goes back to initially an arbitration ruling that ruled in Iraq's favor, that Turkey hasn't yet paid, but then it got caught up in intra-Iraqi disagreements over contractual terms, over payments, also the independent producers in Iraqi Kurdistan. having a stake and looking for clarity. So the short answer, no, yesterday's decision won't affect that, like the immediate restart of the pipeline. That still depends on Iraqis and the producers in Iraq solving their current disagreements. But I think it will cast a bit of a shadow over those negotiations, because now they'll know that whatever they do negotiate and agree is only going to be temporary, and they're potentially going to have to renegotiate everything within a whole new framework a year from now, or perhaps even have something imposed on them from the government level by Iraq and Turkey.
Yeah, well, it's quite sizable amount of production, 500,000 barrels a day, so not insignificant. Patrick Sykes from Bloomberg, Istanbul, thank you so much. Now, Thailand's cabinet approved Vitai Ratanakorn as the nation's new central bank governor for a 5-year term starting October the 1st. He's known as a rate cut advocate with close ties to the government and was chosen over the Bank of Thailand Deputy Governor Rune Malikamas. And a quick look at markets and how things are faring as we gear up for more and more earnings to come out this week, including some of the big tech names. Meta, Apple, Tesla are some of the ones we're watching out for. Today, S&P and NASDAQ pulling back from those all-time record highs reached once again in trading yesterday. S&P breaching 6,300 throughout yesterday's trade. That was the close. And NASDAQ also another all-time record high, getting close to 21,000. So there you have it. A bit of a mixed picture, and European markets entering the day looks like in the red as well, down about 0.5%. Later this week, we're going to get more European earnings. Watch out for some of the earnings coming through from the banks, in addition to that ECB meeting, and whether or not the ECB are going to sound a little bit more concerned about the growth outlook is going to be on investors' minds. So that is the picture for equity markets as we round up the show. That was it for Horizons Middle East and Africa. I'm Joanna Bersace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.